Hi everyone and welcome back to the channel. Today's video is all about claiming your home office. If you worked from home last year because of COVID, you can actually get credit for that on your tax return. There are two options to choose from if you do this. So I'm going to explain what those are, show you how much you can get, give you examples of how to claim them on your taxes, including which expenses you can get credit for, and share some tips to keep in mind when deciding which of the two options you should be choosing. The two new options that are available to us this year are the flat rate method and the detailed method. First up is the flat rate method. In order to qualify for this credit, you must have worked from home for more than 50% of the time for 4 or more weeks straight because of COVID. How much do you get? A $2 credit for every day you worked from home, up to a maximum of $400 for the year. As an example, let's say on March 1st last year, you had to work from home because of COVID, and that lasted for 16 straight weeks. You now qualify to claim this credit on your tax return. On top of the 16 straight weeks that you worked from home starting back in March, you were also asked to work from home 1 week a month for a period of 3 months. Since you already met that requirement earlier in the year, you can also claim the additional 3 weeks, bringing your total amount of weeks to 19. If you work 5 days a week, that's a total of 95 days. At $2 a day, you can claim a credit for $190 on your taxes. Does this mean that you get a check for $190? Not exactly. What it means is that it reduces your taxable income by $190. How does that help you though? Well, let's say you normally make $40,000 a year. CRA would calculate your taxes owing based on $40,000. If you apply for this credit though, then they only calculate income tax based on $39,810. Think of it as having the exact same effect as the deduction you would get had you made an RSP deposit for the same amount. So how do you apply for this credit? You apply for this when you file your taxes this year by completing this form. The second option is the detailed method. This option is more complex, but it can result in a much higher tax return because it allows you to claim your expenses related to your home office, and on top of that, some supplies that you had to purchase for work, as opposed to just a flat daily rate of $2. In order to qualify for this credit, you must have worked from home for more than 50% of the time for 4 or more weeks straight because of COVID. Unlike the first option though, even if you meet that minimum at some point during the year, if there are other periods during the year where you had to work from home, but it was for less than 50% of the time, you cannot claim those days. So if we take a look at our last example, the time you worked from home in March for 16 weeks would count, but you wouldn't be able to claim the time that you worked from home for any of the 3 additional weeks during that 3-month period. Let's say during the 16 weeks you worked from home, you had $5,000 worth of eligible expenses, which could include things like property taxes, rent, utilities, just to name a few. You can only claim the portion of expenses that represents the room you worked in. So how do you figure out how much that is? Let's say you worked out of your bedroom, which is 150 square feet, and the total square footage of your home is 1,300. That room represents about 11.5% of your home. That is the percentage of the expenses that you can claim. But we're not quite done yet. Since you use the room not only for work, but also as your bedroom, you need to further reduce how much you can claim by the amount of hours you worked compared to the amount of hours in a week. If you worked 40 hours out of the 168 hours that are in a week, this means you use that room for just under 24% of the time to work. So this is how much you can claim. If, however, you used a room in your home that was used only for working and no other purpose, you would only factor in square footage of the room and not the hours. On top of that, though, you can also claim the full cost of eligible supplies, like purchasing paper or pens, for example, if you needed to for work. This option, however, not only requires the same form, but you also need to complete and have your employer sign this one. On top of that, you have to have receipts to support the expenses that you're claiming. But here are some examples of things that you can claim using this method to help get a bigger return. Be cautious though, not all purchases and expenses relating to your home office can actually be claimed. Here are some common expenses that you might think you'd be allowed to, but aren't. The purchase of computers, tablets, calculators, office furniture, cell phones, mortgage interest, and those are just to name a few. If you're trying to decide which method you should be using, here are some tips to keep in mind. If you can, try and do the math to figure out which one's going to give you the higher return. Do you have receipts to back up the expenses you want to claim? Are your home expenses low? If so, you may get a larger credit claiming $2 a day versus using the detailed method. Will your employer sign a T2200S? Did both you and your spouse work from home out of the same room? If so, the amount that you can claim under the detailed method will be split between the two of you. If you use the flat rate method, though, you can both still claim the full $2 a day, which might turn out to be more. Hopefully you found this video helpful. Stay tuned for more tax tips for the upcoming year. Thank you so much for watching, and we'll see you next time.